Good morning. It is November the 1st, 2017. We got through Halloween, looks like intact. Our goodie bowl that we left because we went to a party was totally empty last night, so we don't get that much traffic. I think some Halloweener came up here and tricked us. They took all the candy, and thank goodness there weren't angry people behind them. We'll start with our usual disclaimer. Hypothetical or simulated performance results have certain limitations, unlike an actual performance record. Simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representations being made in any account will or is likely to achieve profit or losses similar to those shown. Okay, stocks are up. Now remember, we talked about yesterday the tendency for stocks into the FOMC. In fact, I think I've only seen it one time in the past year when this didn't happen, is for stocks to rally the day before and then to rally into the announcement on the day of the announcement. And so we had a very strong stock market overnight. The strength in the stock market, Chinese data better than forecast. Third quarter earnings per share stronger than forecast. Crude up. Big draws in products and crude. Trump's tax package, TTP, and perhaps a dovish appointment, a wait-and-see new Fed Governor Jerome Powell to be announced tomorrow. And he is the front runner right now. And we'll see if that actually happens. So, stock market is strong. We've been in a buy the dip mode forever. We're still in that. We're headed for 2,600. And probably quickly too. Okay, all these things tend to take treasuries down. Gold is up overnight, probably because of the terror attack. And we're going to be sold a bill of goods that this is the new norm right now. There's only a few bad apples out there. We can't label all Muslims, and you can't, as terrorists. But it just turns out to be the case that damn near every terrorist attack that's done in the world today is done by a Muslim, so that's also a fact. And until we start going in and fighting the ideology that does this, like taking down the mosques that promulgate and promote this idea of violence, then we're going to have these attacks on a regular basis. We're inviting these people into our country, and the Democrats use the immigration and those people as a source of votes. And that's why it's done. If these people came into the country as Republicans, we would have much tighter immigration laws as it stands right now. So that's the issue, and more people are going to get killed. We're going to have more attacks until we decide to tackle the problem, and that won't be today. Treasuries right here, pretty good support in this 20 area to 24. It is definitely a B. Definitely a B. Yesterday's activity was, so everything was pointed to lower prices today. The issue is, will 2024 hold? So we do have news today that can move the markets. ADP, strong number, plus 210. Not good for bonds. PMI manufacturing, 54.6. Won't get a lot of play, but that would be bad for bonds. ISM manufacturing, 59.5. Can come in higher than forecast. Not good for treasuries. And crude, they're looking for a draw of 1.5 million barrels. Cushing, the API showed minus 5.1 for crude, minus 7.7 for gasoline, and minus 3.1 for distillates. very, very strong numbers. Remember, yesterday we talked about we're going to 55. Don't know what news will take us there, but we did have the APIs last night, and looking for draws across the board. And last night's API numbers right there would have taken crude higher, and crude was cited as one of the reasons for a stronger stock market, I believe. The energy sector is about 8% of the S&P 500. Second buy 13 to 17. I think the FOMC meeting will keep the markets in check. Like the short side better. Sell 1 27 to 31. Sell 2 3 to 7. No press conference today, which means that the market's playing for current policy to remain unchanged, interest rate increase no sooner than December. Now, having said that, if they come out, what would turn the market upside down? The Fed coming out and cutting interest rates today, right? That would be unexpected surprise news. And if you were short the bonds, you'd have to dump those at the market, and if you were smart, you would get long. But you would have to get out, take any fill that you could get. It would be good for the stock market. It would be good for gold. It would be bad for the dollar. And so in any of those complexes, if you're on the wrong side of that announcement, you just got to get out. And you have to take your lumps and make sure it doesn't get any worse. You cannot approach that with the idea, I can't take this big a loss, because you're going to take a hell of a lot bigger loss when you do that. So the surprise unexpected news today would be the Fed cutting interest rates. Another thing that could rally would be the Fed coming out, the Fed guidance saying no interest rate increase in December unless this happens. The market right now is built in an 80% probability of an interest rate increase come December. So that would, again, take stocks, treasuries, and gold higher, and the dollar lower. So you have to think this stuff through, I believe, before it actually happens, so you don't say, gosh, I wonder what I should do now. If they were to raise interest rates today, which would be that it would be surprise expected news, because they're on the course right now of raising interest rates. It just happened a month sooner. So it would definitely impact the markets. It would be a huge reaction, but you would not necessarily be on the wrong side of the market, in the markets that you were trading. And that's the difference. You have to expected news, surprise expected news, surprise unexpected news. You have to be able to classify the news in those three categories. So here's the 30-year. 8 to 12, number 1. 15-19, sell 1. 23-27, sell 2. On the buy side, we're there right now, so the buck to 04, number 1. 25-29, buy 1. 17-21, buy 2. Look for a quiet sideways market today. The French and Italian banks are closed. That will impact liquidity a little bit, not a lot, but some. Too many factors, Charles. You're giving me a headache. Gold is up overnight. I would imagine that's because of the terror attack yesterday. Off that great lottery right here, because we discriminate and some countries are underrepresented on their immigration in the United States, we have a lottery that lets 50 to 55,000 of those people in. You just sign up, no charge, become a part of a pool, and if you can win the lottery and come into the United States, you start your path to citizenship, and because of chain migration, you can bring your wife, your grandparents, aunts and uncles, and kids in with you. So Pretty nice way to go. Okay, 80 to 82, sell 1 on gold. Top of the trading range, and you can see right there at 80 is where resistance starts. 84, 86, sell 2. Probably looking at our range right here, 70 to 80. Like to buy against 70. London's low is 75, so 73, 75 buy 1. Give ourselves a little room. 69, 71 buy 2. Okay, let's go back and see if we can quickly see that giant VPOC at well, I've got volume, and this is for the last year at 70, 76 is where I've got it based on the monthlies. $77 is where I've got it. 68.50, and I don't see that. So where am I wrong, Scott? Got a bulge right there. I've got that. I can see that at 68.50. So maybe you're looking at the F2 screen. Yeah, I see it. Thank you. Good to have another set of eyes right here. I will miss some obvious things from time to time. Okay, the euro's in a trading range. United States raising interest rates in December is not bullish for the euro, but it's in December. That's what the market expects. They raise interest rates right now, euro will head down. If they modify their language about raising interest rates in December, the euro can trade up if the interest rate increase is delayed. So 75.85, sell 1. I think that's where we were last night. No, we were 95 to we were at the buck last night. So 117 even, sell 2. On the buy side, we'll just make it 50 to 60. See a pretty quiet market. And then we'll make it 25 to 35, buy 2. Crude oil, huge, very big draws across the board. And we talked about that last night in the APIs. What the market wanted to see was a draw in crude and a big draw in products, and they got it. And crude exploded to the upside. We also said didn't see any reason for crude not to make it to 55. Get stops of this. We're at 54, 54, 50. Why that? Because it's a very round number. And we're close enough for the trading community to push it up there. Again, just pointing out that you don't have to have a long string of fundamental reasons. 55, that's a market number. 50 is a market number, and they're big ones. We're close enough to go get stops beneath that. The trading community knows there's stops outside of those numbers, and they'll go get them. Doesn't take much to get there. So we did have supportive fundamental news. We do have the OPEC meeting this month, and they're expected to roll the current production cuts over probably for the first half of next year. There are reports coming out that the demand for petroleum, crude oil, petroleum liquids, etc., is increasing due to increased global economic growth. So there are articles out there that supply and demand might be tightening right now. So a lot of things have come together to get us to 55, but we saw it, and we knowed it was coming, as they would say in East Tennessee. So right now we've rejected prices above 55.15. So we'll make 55, 55 and a quarter, sell one. 55.50, 75, sell two. On the buy side, 54.50, 54.75, buy one. And then 54 even, 54 and a quarter, buy two. Today, EIA inventory, they're looking for a draw of 1.5 million barrels. They would like to see this number exceeded. A draw bigger than 1.5. They want to see a draw in gasoline and heating oil. Comparable. It'd be nice if they got them comparable to the API numbers. Looking for a place to buy it in anticipation of good inventory numbers. Now, one of the things that you have to come to grips with in trading, and one of the things that we try to promote, is take your position or swing trades, be an option buyer, and we're pretty good at that. And in that way, you don't wake up getting your head handed to you if you're on the wrong side of the market, going flat on the outright positions. But everything behind us right here is a P. Had some rejection right here at 54.75, but we definitely have a P right here. So everything leading up to this was foretold by market structure. You could see that the bias, the easiest way for the market to trade, was higher, and we can't forget that. I mean, the profile says retest resistance and or higher, retest support and or lower. And there's that old saying out there, the profile doesn't lie, and it doesn't. Okay, news. ADP 210, very strong number. Markets PMI 54.6, strong number. ISM manufacturing 59.5, can come in higher than forecast, strong number. Construction spending 0. And crude minus 1.5. FOMC announcement. Remember, we talked about yesterday the tendency for the market before is to rally the day before, rally the day of, little profit taking on the announcement, then finish up strong. It's a rumor fact trading situation. So the news focus will be ADP, ISM manufacturing. For crude oil players, the EIA inventory report. For stock index players, followed by the FOMC. So okay to sell, failure to take out 85. 89.91, sell 2. On the buy side, 79 to 81, trying to pick up this area right here, pick up that area right there, buy 1. It's pretty aggressive. 75, 77 for buy 2. So we'll take a bit to get stuff up and posted. Going to get going. And back with you as soon as possible.